J.P. Morgan kind of had a bad public relations disaster last week. Not the downgrade by Moody's. No, it was the latest appearance of Jamie Dimon, its CEO, before a congressional committee. Funny thing happened, though. Instead of facing withering questioning from snarling members keen to score points against the most recognized figure from the dreaded banking sector, he was tossed mostly cream puff questions. Well, what may have happened is that all that aggressive lobbying that organization does may have paid some dividends. It pays money to lobbyists, specifically to lobby Congress in general, but specifically members of committees that regulate the industry. Let's talk with Alex Bronstein-Moffly. He's an analyst with Street Research Group, which tracks lobbying associated with legislation before Congress. All right, last week, Alex, it was the House Committee, the Senate House Finance Committee. The week before it was the Senate Banking Committee. And I remember members were actually apologizing for having to ask Jamie Dimon some questions. What's going on here?
J.P. Morgan has a lot of close relationships with members of both committees. They've hired a lot of staffers that have worked on the Banking and Finance Committee, and they also contribute a lot of money to both of the members on both sides.
What kind of money is being contributed here?
They're spending about $1 million each election cycle to members, primarily on the Banking and Financial Services Committee, and they spread it around between the Democrats and the Republicans.
How much is spent, though, on lobbying?
They spend about $7 million a year on lobbying, so they're up there. They put a lot of resources behind it, and they see some results.
Is it commensurate with what other executive or major banks are spending?
Yep, absolutely. Most of the major banks are heavily involved in Washington. They have to be. It's for them, it's not a choice.
What are the top contributors to lobbying among the different sectors?
Healthcare usually tops out #1 between the pharmaceutical and the insurance companies, etc. But financial services is right up there. So the banks, the energy companies are really high up, and the tech sector has seen a lot of growth recently.
A lot of revolving doors. You mentioned earlier about how staffers go to the other side from policy over to corporate, and that certainly happens in the banking sector.
Absolutely. There's a lot of movement between Congress to the different banks, but also back. You have lobbyists who have worked as lobbyists for the banking industry and are now serving on one of the banking committees.
And you also found that technology is coming up now. You mentioned some of these other sectors, but they too are realizing that they can, I don't know about wield influence, but that there is some gain in spending money there.
They have to be. The SOPA debates, which was over internet censorship, really spurred a lot of technology companies to get involved. Wikipedia just registered their first lobbyist because of this. But you also have companies like Twitter and LinkedIn who are now getting involved. So these sectors are realizing that the government can regulate them, and they need to be involved.
And every time you ask a member of Congress about any connection between policy, decisions made, access, influence, and all this money that's awash in Congress, they say it has nothing to do with it.
Yes, they do. They appreciate the donations, but they say it does not affect their votes, that they are serving just their constituents.
Alex Bronstein-Moffly from Street Research Group, thanks so much.
Thank you.